Hello members, this is an update on the Cradle-to-Grave series. I've been remiss, haven't done this in a while. Let me pick up where we left off. I talked about the XLF. We actually made the trade in the XLF. I wanted to show you why we did what we did. If we look at this, we tried to get into this back in this area. Ended up, we actually bought here, ended up getting stopped out there for a small profit. And then the next day, we ended up getting back into it, writing it up, and then taking a profit up here. So, we got most of the move. That move came into this swing point high. It did get over it, but given that this has been a weaker index, we expected it to try and retrace. That's what it did. It did almost a full retest regen of that, and now has pushed back up towards the highs. So it's still a bit less than where we got out at, and potentially could go higher. If it looks like it's going to go higher, then of course we could come back in and try to trade it again. It was coming into the top of this breakdown bar. That was the area that we were targeting. 23.53, got as high as 91, closed at 81. I forget exactly where our exit was, but it was around this area. So now the question is can this push again? If it can push again, then maybe we can ride it up to the next area, which is a little bit higher. But this trade has probably done what it was going to do, and it's probably best to look somewhere else versus be here. It was a good trade, but it was a trade, a short-term trade, just like we tried to do. Gold is the other one. Gold shares have come down significantly. This, I believe, still looks good on the long term, but let's go over what's been happening here. If we look at it just from a pure ABCD structure, right, we've had ABCD structures form and fire to the downside, and it's overshot on Friday on that ABCD structure. Now it's almost down to the bottom of this range if we look at it this way. As a matter of fact, if we pull it back and look at it on a weekly, you can see the range better. And that range is this whole area up here that it's been trading in. Swing point highs here, that's a retest regen bullish. It's right at the full retest again. It tried it once before and shot higher. Now it's down there to try it the second time. Odds still favor it to bounce from this area on a second try, and that part of it still looks good. Now realize the big volume is down here, and we could eventually see this range expand back into this area, and we're talking about as low as right there. So even though we may see a continuation down now, I suspect some sort of a bounce is the more likely case, and then potentially a pullback deeper into this area. Let's go to the monthly chart, which is the key chart. Now on the monthly, we had seen some bearish retest regens take place. So first of all, let's set the context. This thing has been in a downtrend for a long time. Matter of fact, it's been in a deeper push down from before. Now we're into the area where it has finally begun to turn. And what I mean by that is our early warning system is always the bearish retest regens in terms of whether this thing can turn. We started to see that turn take place when we got over and held over this bearish retest regen on that first push where it had some decent volume on it. So that's the first indication that on a long-term basis this is trying to turn. The next case is the next bearish retest regen, and we got over that, or actually got right to the top of it. That high is 122.32. We got to 123.93, stayed over it, and then back into it, and we're doing a takeaway bar at the same time. That is telling us that potentially we could get a retest down into this area down here, and that price point on that swing point low is about 120. What is it? 116 is the high. Is the low of the swing point low. That also is into these big bars. The worst case, I suspect, if this thing's still going to be bullish, would be the bottom of this bar, and that's 107. So we still could get a deeper retrace on a long-term basis. But then again, when you're getting these long-term turns, if that in fact is what this is, if this really is some sort of a rounding bottom that's eventually going to head higher, that retrace is probably not going to get that deep, maybe as far as the low of the swing point low. So on a longer term basis, I think we're getting a long-term turn. The way you trade something like that, if you're going to make a lot of money in any kind of a stock or an ETF or anything, you want to catch these long-term moves and be able to play them for some sort of a long-term time frame. In other words, trade this thing all the way back, like in this case, up to these next set of swing point lows, which is 145, 150. If that is true, that's a $30 move from here. That's about a 30% move in terms of percentages. So there's still a big move ahead probably for gold. And so the ideal here is that as gold comes back, you want to be able to accumulate some of it on these tests, in particular on this weekly, on this test, right about this area. We'll probably try to buy some more this week. If it gets down into this area here, that would be the place to buy one more time. And that's it on the updates. And we'll see if there's any other trades. The market's made a big move up. Probably going to consolidate now, and then potentially try to move higher again. As far as gold, this is probably in a long consolidation where you have to buy and sell and try to accumulate. And so the ideal is, like, let's say you buy 100 shares here at this price point. You want to sell 50 or 60 of them on any kind of a move up, so that you can accumulate another 100 or 150 on the way down. And you slowly build up a position size that's much larger. That's it for the updates. Thanks.